Hey, good morning, everyone, and welcome to the PivotBoss Pre-Market Report for March 11th, 2016. I am Frank Ochoa, aka PivotBoss, with analysis for the upcoming session. Here's a look at the ES in the daily time frame. Where we last left off was we obviously saw a significant indecision bar that formed in the previous session here. We had a big time push into the previous week's high price. That was rejected. We dropped down into the previous month's high, and that's the 1959 half level, and that was defended. And eventually, we closed right around the center of that range. Basically, after the EU news, you saw the market just form the key range to watch and continue to test the edges here. So this is the range that we've been watching throughout the entire week. We knew that this week could be a trading range week given the width of the pivot range for the week. You can see how wide the pivot range is for the week compared to average. That usually implies range activity, especially following a trending week. So what we've seen is kind of the whole thing play out. We were looking for bulls to defend a pullback even as low as the previous month's high, and that happened. So the expectation now is to watch how does price respond around 2000. Any push beyond that level, if there's acceptance, the expectation would be for a continuation to the upside. And the upside target right now, bringing up the primary weekly target, would be 2022. So that's the primary upside target for the week, and heading into the rest of the session here, should price be able to see acceptance beyond 2000. Any failure to see acceptance above this zone opens up a return back toward 1959 half and perhaps into the 1941 key level, which is the center of the August range here. But overall, we've seen an uptrending behavior. We've seen bulls defend the pivot range time and time again in the uptrending market. So right now, the upside is the most favored direction, but we do have a very important round number here at 2000 that the market is currently watching. Any failure to see acceptance above that zone could still open up a return back toward the bottom of the range, and we could see further range development until expansion occurs perhaps next week. So we take a look now at the intraday time frame. You can see here the key levels that I'm watching is the previous week's high. That's going to be right here at 98.25. You also have the previous session's high. That's 95.25, and these are the RTH levels here. So the RTH high is 1995.25, and that's kind of where we at. We have 2001. That's also the monthly 25% pivot. So we have a lot of confluence of resistance right here, and the market is attempting to establish acceptance above that zone after taking it off at the previous session. So again, if there's any failure to hold above 95s, the implication would be for price to auction back toward 5-day VPOC at 1977, followed by a likely push to the bottom of 5-day value at 69. So that's the early idea right now. Any failed acceptance above this 95 opens up a return to value. Pushing beyond 2000 or 2002 opens up a continuation into 2005, 75, and a likely move into 2012s. We also have the primary weekly target at 2022. So nice clear air above that zone. All right, let's take a look here at crude oil. Crude oil, we know, has been very, very bullish lately. We obviously had our rejection from the lows, price rallied to the midpoint of the key range, and upon taking the key range bid there at the center, that was a huge squeeze there that really shifted the tide, because at first we were looking for some sort of rejection because price was holding at that level so long, but we knew above 35.25 likely squeezed, and that was our key level for some time. And you can see, boom, a big time move. We had a lot of shakeout back and forth here, but I think in holding above 37s, that implies a continuation into 39.17. If you recall, taking composite VPOC bid at 33.44 implied a move to the next highest HVN. While there's not an HVN on the composite here, you can see that in the previous contract we did build out in that zone, and the MCV-POC for that area is 39.17. So we still have a little more upside to reach the weekly targets at 39.17 and 39.35. But the ultimate goal here is, since price took 34.63 bid, the expectation would be for a rally into the top of its key range, and that's 40.50. So still more upside to see ahead, but we could see further back and forth action into that area. It may not be a straight line, but overall continued short-term strength should be seen. Now, once price does reach 40.50, that could be a zone there for a first test fade, as market participants that have been long this entire time will start to take profits off that area. All right, let's take a look at the intraday time frame here. So on an intraday basis, you can see that prices held and they continue to trade off of the weekly PivotBoss pivots, the expansion targets on a weekly basis. And the recent rally off of the 37.27s led to a move back to 50. Price pulled back, defended VPOC shift down, and rallied through it. So the next upside target is going to be 39.25. We also have 39.24 as the primary daily target, and right now prices are holding on a pullback at VWAP and the overnight pivot. So right now this is a zone to watch for a potential bounce opportunity into 39.35. Failure to hold above 38.50 opens up a rotation back toward 38.26 and perhaps as low as value on a 5-day basis at 37.80. So right now, short term, expect bulls to defend for continuations higher into 39.25. All right, taking a look at gold now. Gold had a significant rally from those lows here. We got very close to reaching the ultimate target here. We moved about 35 of the 40 handles basically into that area. And then we were looking for any potential squeeze off that zone, however. And we saw it. As a matter of fact, we saw the outside reversal as well play out, where price had a low below the previous low and closed above the previous high. That's an outside reversal buy setup, the way that I define it. And that's usually a big time slingshot pattern the other way. You can see that prices pushed to new highs beyond 1280s, getting up into the 1287s. Big time push. We hit the 100% target for the week, which tells you right there that price has traded basically average for the week, and there's still one more day to go. So a nice average range, but we did see rejections above 1280. That's important. Rejections above 1280, the previous week's high, and now we're back down testing 1263.90, which is the ultimate key level there, the top of the key range. Again, what looks like happened recently is we got that low, snapped up to a high, and now we're popping back to the midpoint of this range here. And that right there tells you we have a new key range to probably watch out for on an intraday basis, and we're likely going to trade within this range until expansion occurs from it. So we're going to watch that closely. But this early rejection opens up the potential to see another move back toward recent lows and perhaps into 1233.30. So we got to watch the edges very closely. Let's take a look at the NQ. Here's the NQ in a daily time frame. We have our new key range up using the new front month contract, the M6 contract, 4,300 quarter. Before it was 4309s. We have the bottom here at 3853s, midpoint at 4076s. So we have about a 9-point differential here. And the midpoint's still intact here on the key range. That led to a push above the top of the key range. Price had to auction lower in order to find bulls. We came in off that LVN and rallied. So right now, a lot of important key levels to watch, but this one is probably the most important. It's 43.55. A bit of an LVN there on the profile. Prices have failed or been reluctant to push beyond it just yet, but you also know that bears have defended. So there are buy stops above that level. So if a push through 43.55 occurs, we could see a swift move into 43.92 and 4400 over the next day or so. And that could continue even higher than that. Any failed acceptance above 43.55 opens up a move all the way back, perhaps into 40.76, the midpoint of the key range. We've been trending up. Pullbacks have been defended at the pivot range. It hasn't been perfect or pretty this entire time, a little hairy, but on the whole, we've seen uptrending behavior. So the expectation would be for a test, at least a push, and a first test through 43.55. And if acceptance occurs, we could see a very solid continuation. So continue to watch that level closely. Looking at the intraday time frame, you can see right now prices are just holding at the previous session's high. RTH high here at 43.26. You also have the overnight high that's holding at that level as well, 43.38. So you can see prices are just kind of top heavy right now, short term, and very similar to the ES here. If there's any failure to hold above the previous session's high, we could see price auction right back into 5-day V pocket 42.78 half short term. Pullbacks could be bought, but again, we're in a larger trading range that's developing now, and any pullback to this area could offer a rotation back to the bottom of value as well. So watch this previous week's close too, 43.14. That's going to be kind of the go level. I think bulls still want to defend this level for a shot at higher highs. Failure to hold this level opens up a pushback to value on a short-term basis. All right, that's it for now. Let's see how this thing plays out heading into the rest of the session. Good luck, trade well, and happy Friday.